guys, so in this video we are going to go over Euro USD monthly key levels. So what we want to look at first is where price is rejecting and where price is failing to go lower. So again, when we're trading Euro USD, my candles are set for, so they're green and they're bullish, purple is bearish. So when you want to trade Euro USD, if the market is going down, that means USD is strong against Euro. When the market is going up, so the first currency, that means that Euro is strong against USD. Okay, so looking at the monthly, we want to make sure we know what's happening on the monthly just because it shows the bigger picture and those long-term moves. So for example, one candle has all this information in it, and that dropped about over 1,000 pips in 1 month. So that's a really good trade, and we want to make sure we're watching this because we can catch those long-term moves. So that's why the monthly is really good. Even if we see like a head and shoulders pattern or W or an M pattern, we can take advantage of that and hold it for longer. So what we want to do to identify our key levels is take out the rectangle tool, and you can choose whichever color you would like. If you want to make it like super dark, you just slide it like this and it makes it dark. If you want it light, you can just go like this. And then if you want to change the outline, you just go like this. Just go to the pencil guy, and then you can make it black if you want. Whatever you want to do, that's how you do it. So what I want to do is identify where the most obvious spots are where the market rejected. So for example, this is the most obvious and it dropped a ton. So I'm going to mark this. I'm just going to make this darker, and I'm going to make the pencil the same color. Okay, so we're going to zoom in. We want to make sure that the zone is right above the candlestick bodies and not cutting through. Okay, so we're going to go like this, take the horizontal line, and we're just going to go right above it. Okay, so this is our zone, this is our point, so we're going to edit it. So 158.022 is closest to an even number of 158 even. Okay, so that is our first key level. And then what I do is just I kind of like highlight it. So basically the wicks are fine if it goes over that line. That's what the zone is for. So anywhere in that area, we just drop down on lower time frames to see price exhaust, and clearly it closed below 158. So that's what's most important. Okay, so we have our first key level at 158. So then our next one is around this level. So we can see that price rejected here and over here. So what we want to do is just highlight that. So it rejected in this area and it rejected here. So what we're going to do is take the horizontal realign, and we're at 138.409. We're going to round it to an even number, 138.500. Okay, so we're going to take a look at this and make sure it's not cutting candles. Obviously, it's going to cut some, like it's, you know what I mean? But we want to make sure it's not like obvious like this, like it's cutting too much. So we want to make sure it's at that level where it makes sense. Okay. So this line is above the candlestick body, so it's good. It rejected in that zone perfectly. So this didn't quite hit it. That happens though. So it tested, tried to go down, then went up, came up and tested that 158, then came down, came up, tried to trick buyers, but then closed below this, and then came up, tested this price, came down, tested this price again. So again, it's cutting through these candlesticks, but it's not like a huge thing. Like it's not like it's like in between here. So this is fine. So again, comes down and tests, again, closes below this price. So there's lots of price action happening around that 138.5. So that is a good key level. And again, we can just take this zone and highlight it across the board. So we can just get rid of this. Okay. Okay, so looking for another one, we can see an area here, here, and just kind of in between this. So let's just see. So we got 124.073. So let's just round it to even. Okay, so it hits it here, goes up, tests, then breaks through, retest this, then comes up. So this is a bit, it cuts through a bit, but again, it just drops and then ends up closing above. Same with here, breaks through, tests this. So this is a good level. So 124 as well. So again, we want to just draw this zone. Okay. So the next one we have is around this area. So we are going to round it to 119. Let's see how that works out. So you're kind of just seeing where price has rejected from and respected. That's all you're doing. So respected here, respected here, respected here, broke above, tested, tested again, tested perfect to the T. Break below, tested, went above to that 124 zone. I'm telling you guys, it works out so well. So again, broke above that 119, went to the 124, tested, boom. So that's a good level too. So we can keep that, and then that would be another zone. So that's what you're doing. You're just identifying where the market is rejecting from. And so when price does end up getting to that level, it will either reject or break through up to that next significant level. So that is how you do monthly key levels. Obviously, price is at right now it's at 1.11943. Okay, so to get to 158, which could be, I don't even know, that's close to, so that's 4,600 pips. So that's close to 5,000 pips. We're not near that. Like this happened in 2008. Okay, so we don't need these key levels on there. So what you can do is in your notebook, you can just jot this down. So you can put Euro USD monthly key levels. You can go 158, 138.5, 124, 119. Okay, so let's get to where price is at currently. So 111.950. So we have a zone. Kind of in this area. Let's just see how this works. So we're going to round it to 7. Okay, so tested, closed above. So tested here, wicked past, closed above, candlestick is above the line, then tested that line, tested here a couple times too. Broke through, tested, then came up, tested again, closed below that 107, boom. Came up, tested, then came to the 119, broke through, came to the 124, tested the 119, so on and so on and so on. Okay, so tested here, went below, but came above, went below a bit, ranged, came above. Again, it's going to cut some candlesticks bodies, but again, it just needs to make sense, right? Like if we have a massive bearish candle close like down here, then obviously this doesn't make sense. But again, it's respecting this level right here. It keeps going up into these other levels. So again, like right now, I'm sure price is going to go to that 1.19. So we have another zone. So since this is below current price, so current price is at 1.11, this is 1.07, we're just going to make it a different color. So I just do purple or whatever my bearish candle is. Okay, so that's how you mark up your levels. So it's the same with every time frame, guys. It's just looking to see where the market rejected and looking to see where the market respected. So again, rejected, 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 and then supported in here, support there, support there. So that's what you're kind of identifying. If you don't understand this, please let me know, because I want to make sure you are on the right track. Zones are everything. I go off zones first, and then I add the other confluences with trend lines and fibs and all that kind of stuff. So please let me know if you don't understand, and we could do a video call. So these are the levels for Euro USD, so you can write them down. So 158, 138.5, 124, 1.1900. 1.07. Okay, so again, we would keep this 1.07 if you want, and then we can keep the 1.9, but you don't need all these levels. Just when price comes up to that 1.19, so if it's at like 1.17 or 1.18, then you want to get your key level in and say, okay, hey, I'm at that monthly key level. What's going to happen? If it breaks through, that's going to be a long-term thing. So for example, like, since it respected that 107 and went to that 119 right here. So that's about 1,200 pips-ish. Okay, so then it broke through that. And this is about 500 pips. So these are long-term trend moves, and this is a lot of pips, guys. So it really, really works, honestly. So let's go to USD CAD quick. So we're going to do the same thing. We're going to mark up key levels for USD CAD. So we can see that the market rejected in this area. So what we're going to do is just highlight it. So right here, kind of rejected. So it kind of failed to break above this zone. Let's zoom in on here for a sec. Okay, so we're going to take this and we are going to round it. So this is closest to 500. Okay, so hit 500, 500, then came above, tried to break above, closed below, all these bodies closed below that 158.5, okay? So that's our first level. Okay, so next one we can see we have 2 wicks at the same kind of point. So what we can do is just go like this, and we can edit it. So 46,843, we can just go to 47. Okay, so as you can see, it hit 47 right there, but it's cutting too many of the candlestick's bodies. So let's go 47.8 or 46.8. Let's say 46.5. Okay, so you kind of just have to adjust and see like how it works. Okay, so wick, again, cutting too many candle bodies. So let's try right here. Okay, so let's do 500. Okay, so tested here, close above, tested, came below, but range went above, then broke through, that's fine. Came up, tested that wick, that's fine. This is fine. It doesn't have to be completely on that wick. It can be as long as it's not cutting too many candle bodies. So 145.5. So in this zone, we're going to highlight it. So basically anywhere around 145.5 we can see exhaustion. So that's exactly what happened in this scenario. So the wick went past about like 100 and some pips. That's fine. Again, we can look on lower time frames. So we can see that it's coming up to that 145.5 level. So we can say, okay, this is what's going to happen around this level. Is it going to close above with a candle body? In this case, it didn't. It came down with a pin bar rejection, meaning that it's going to tank. Same thing happened, wicked, closed below. If the candle body, for example, closed above like this, then that would be a bigger issue, because then we're actually breaking above that key level. I mean, which is fine, we can buy it, right? But I'm just saying, if it's rejecting, then that wick is coming up to that area and then closing below. So that's one level we have. Okay. And then we can see that kind of in this area we have one. So again, making sure that we're not cutting any bodies. This is fine because it came up and rejected. So we're going to round this to 141. Let's see. Okay, so close below, came up, tested, came up with a wick but closed below and tested right there, tested again right here. So that would be kind of like another level. So 141. And then there's too much going on in here, so I want like a clear level. So starting from the start. Okay, this looks good. So 127. So again, that was the beginning, then tested, broke, tested multiple times, candlestick body closed below, came through, tested, that this is fine because it closed below but then closed above, then tested, went up, closed below, tested, came up, kind of ranged, and then eventually broke above, and then went up to the 141, then 145.5. Okay, so that's another level. So again, since it's below price, this is now support. Okay, so again, we don't need 1,000 different key levels. It's just the major ones that point out. And then again, right here, it rejected around this level. You want to round it, so 94. Just make sure it's always at a rounded price. If you round it, let's say to 94,200, let's say, and it's crossing over the candlestick bodies, then you just want to round it to the next nearest. So 94,000. Okay. So that is it for USD CAD. So you can put 158.5, 145.5, 141, 127, and 94. So the ones we would want to have here is the 141. Yeah. So again, just mark these in your book, because when price gets closest, you can say, okay, we're coming up to a major level. So for example, it rejected and stayed below that 145.5. That's 1,000 pips from March 2nd. So April, May, it's so about 3 months. So, I mean, pretty good. If you had, like, for example, if you even had just a one lot, that's $10,000 in 3 months. But let's say you had like a 5 lot or 10 lot, that's way more. That's, if you had a 10 lot on that, that's 100 G's. So, I mean, just have to catch that one good trade off that key level, you're set. Okay, so NZD USD, same thing with here. So we have a key level here. We want to round it. 87,994 is closest to 88. Perfect. It's not going over a candle body. Rejected twice, made a double top pattern. I'll get into patterns on a next video, but I'm just going through monthly key levels. So we can just highlight this, and obviously it's going to be green since it's above price. So anything above price, use as a different color for resistance. Anything below price, use as a different color for support. So we have one key level. Make sure you're writing this down. We have one key level at 0.88000. Okay. We have one at this one is obvious, but let's just see. It's cutting too much in there, so that wouldn't be a level. Sometimes like we're on NZD USD, it's like really messy, so sometimes you can't get that clear key level. So in that case, you just drop down on lower time frames, obviously, to trade it. So in here we have one, so let's round it to 500 and see what we get. Okay, so close above, perfect, down, test, test, break above, test, test, close, test, 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 then close above, and then wicked above, but the body is closed below that price, so that's good. I mean, yeah, 59,500, perfect. Okay, so that could be our support zone. This is just honestly the easiest way to do things. Okay, so that's a level. So as long as price, like I said, the body closes above this price, which it did, it wicked all the way down, then came up and closed above that price, that's your entry right there. Same thing with here. Price touch 88, came down, tested it again, like literally right there. It was about 10 pips above maybe. Take that entry, wait until the next move down. So that would be about, like if you held that whole thing, 2,400 pips just off that one price with like 10 pip drawback. That's nothing. Okay, here's another one right here. Again, irrelevant to price, it's at 0.64, but I'm just showing you exactly how to do the key levels. So we have an area right here, so we're going to round it to 500, see how this works out. Okay, so test, close above, came down, test, that's fine, this is fine, closes above, test, that's perfect, perfect, and then obviously it hasn't touched yet. Okay, so that looks great. So again, we would put a little zone in here. Oops. Okay, so these are our zones for NZD USD. So 88, 59.5, 49.5. So this is all you do. Like, I mean, again, when let's say price was at, let's say price is coming up to this level, okay? So it's coming up to that 88. We're looking for exhaustion. It's looking like it's going to make a double top pattern. So it comes up. Okay, so it's testing that price point. Wicks and starts going down right at that price. This is on the monthly, right? So obviously we want to drop down, but when it gets close to that 88, we can say, okay, that was a major level. It dropped like 1,300 pips. Usually when it drops like that and hits that level, it's going to drop even further. So then what happens? breaks right through, tests that trend line, and then just keeps tanking. Sorry, it's taking forever because it's on the monthly. Then again, dropping down the 4 hour and 1 hour to get your key levels, to get your targets and stuff like that. This is an easy trade. So that's why I say you always want to take those entries at that specific price. It doesn't matter if there's a bearish engulfing. It doesn't matter if there's a bullish engulfing. It's good to identify what that is. But again, it all comes down to price, because what the banks are doing in the hedge funds are they're injecting orders into the market at that specific price. So it's not like they're injecting an order at a bullish engulfing or bearish engulfing. Like, that's all for retail traders, and you want to trade like the banks do, obviously. So again, it's just focusing on that price level. As you get through the course, you can see how this all works with zones and stuff like that, but it's really powerful. Okay, so you get the point. So that's all I'm going to do. I did 3 pairs. So what you can do is you can submit homework. So what you can do is choose whatever currency pair you want, obviously not the same ones. Go to the monthly time frame, identify, again, you can identify where the market rejected. So you can use these, you can just start with identifying where these levels are. So like right here, whatever, and then you can use the horizontal lines, whatever is easiest for you. And then obviously if you got the Pro plan or the Pro Plus plan, you can send me the homework submission for review, and I'll just make sure you're on the right track. If you got the standard plan without the homework submissions, it's fine. Like, you can ask me questions. Like, I'm here for you. That's the biggest thing about purchasing my course and investing with me, is I want to make sure you're progressing and you're on the right track. So I'm here whenever you need me. If you guys have any questions on this, please don't hesitate to ask.